everyone, welcome back to Make Money Now. Today's topic is a crucial one. We're diving into the truth about credit scores and revealing how you can give yours a significant boost overnight. So buckle up as we unlock the enigma that is the credit score. If you're new to our channel, hit that subscribe button and the bell icon so you never miss our financial tips and tricks. Let's start at the beginning. A credit score is a three-digit number, anywhere between 300 and 850, that represents your credit worthiness. This number is calculated by credit bureaus using information from your credit history. Simply put, it's a numerical summary of how well you manage your financial obligations. In the United States, your credit score plays a vital role in your financial life. It acts as a key that unlocks various financial opportunities. Banks, lenders, landlords, and even some employers use your credit score to gauge your reliability when it comes to financial matters. Think of your credit score as a report card for your finances. Just like in school, the higher your score, the better you've performed. And in the world of credit, a high score opens up opportunities for lower interest rates and better loan terms. It gives you more financial freedom and can make your financial journey smoother. The higher your score, the better your opportunities for favorable interest rates and loan terms. There are tons of myths out there about credit scores, misconceptions that can lead you astray and potentially damage your financial health. So let's bust some myths and set the record straight. First up, your income affects your credit score. Well, brace yourself for a surprise. This is totally false. Your income isn't reported to credit bureaus and it doesn't impact your score directly. Yes, a higher income can make it easier to pay bills on time and maintain low credit utilization, but the amount you earn doesn't directly factor into your credit score calculation. So let's put that myth to bed. Next up, closing old credit cards will boost your score. This one is a doozy. In reality, closing old accounts can actually shorten your credit history and potentially lower your score. Your credit history length makes up about 15% of your FICO score. So those old credit cards you've been holding onto for years, they're actually helping your credit score by lengthening your credit history. In conclusion, it's vital to separate fact from fiction when it comes to credit scores. Misunderstandings can lead to poor financial decisions and ultimately a lower credit score. So remember, income doesn't directly affect your score, and closing old accounts can shorten your credit history and lower your score. Now, how can you boost your score quickly? Here's the secret sauce, folks. It's not as daunting as you may think. First, lower your credit utilization ratio. This is the percentage of your available credit that you're currently using. The lower, the better. Aim to use less than 30% of your available credit on each of your accounts. Remember, this doesn't mean you should spend less overall, just spread your spending across different accounts. Second, consider asking for a credit limit increase. But here's the trick. Don't increase your spending. This might seem counterintuitive, but it can instantly lower your utilization ratio, giving your credit score a nice little boost. Just remember, this isn't an excuse to spend more. It's about creating a healthier financial profile. Now let's talk about credit reports. You can get a free report once a year from each of the 3 major credit bureaus in the USA: Equifax, Experian, and TransUnion. So why not take advantage? Check your reports for errors. Yes, errors do happen, and they can drag your score down without you even knowing it. These errors might include misreported late payments, inaccurately reported amounts owed, or even accounts listed that you don't recognize. If you spot any of these, don't panic. You can dispute these errors and potentially give your score a significant boost. The process might take a little time, but it's worth it. And finally, remember that boosting your credit score quickly is a great start, but maintaining a good score is a marathon, not a sprint. It's about creating and maintaining healthy financial habits over time. So start today, and before you know it, you'll be on your way to financial freedom. Disputing errors like misreported late payments can give your score a significant boost. So take control of your financial future and start boosting your credit score today. Let's talk about credit inquiries. These are requests made by potential lenders to review your credit report. Now there are 2 types, hard and soft inquiries. A hard inquiry is when a lender checks your credit because you've applied for credit with them. These include credit card applications, auto and mortgage loans, and sometimes even rental applications. Hard inquiries can slightly lower your credit score and will typically stay on your credit report for about 2 years. On the other hand, a soft inquiry doesn't affect your score. These occur when you check your own credit or when a promotional credit offer is made. It's important to understand the difference since you want to avoid having too many hard inquiries. But remember, checking your own credit score often is a soft inquiry and doesn't hurt your score. So check your score often to stay informed. Maintaining a good score is about consistent habits. It's a long-term commitment, much like maintaining a healthy lifestyle or building a successful career. Firstly, always pay your bills on time. This seems obvious, but even a single late payment can cause a significant dip in your credit score. Set up automatic payments or reminders to ensure you never miss a due date. Secondly, keep old credit accounts open. Remember earlier when we debunked the myth that closing old credit cards boosts your score? Well, the opposite is true. Keeping old accounts open lengthens your credit history, which is a factor in calculating your score. Thirdly, diversify your credit types. Having a mix of installment loans, such as mortgages or auto loans, and revolving credit, like credit cards, can actually boost your score. It shows lenders that you can handle different types of credit responsibly. Lastly, avoid applying for new credit too frequently. Each time you apply for new credit, a hard inquiry is made, which can temporarily lower your score. So apply for new credit sparingly and only when necessary. These strategies won't boost your score overnight, but over time, they can help you build and maintain a good credit score, which is key to financial freedom. These actions show lenders that you're a responsible borrower. You're now ready to not only boost your credit score overnight, but also to maintain a healthy score long-term. With the right knowledge and habits, you can navigate the world of credit with confidence. If you found this video helpful, please show your support by hitting that like button and sharing it with others. We'd love to hear about your credit score journey, so don't forget to drop a comment below. Until next time, stay financially savvy.